Now speaking, Pony Ma, Chairman and Chief Executive Officer. I reported that in Q1 we achieved a double-digit revenue growth rate, with our games and advertising revenues increasing. Our non-IFRS net profit also grew 27% year-on-year and 10% quarter-on-quarter. We have focused on upgrading our technologies and product innovations, with our Wixin and WeChat MAUs reaching 1.3 billion and 597 million respectively. In addition, our commercial payment volumes rebounded sharply and we announced a new high-performance computing cluster. Our total revenue was 150 billion Chinese yuan and gross profit was 68 billion Chinese yuan. Now speaking, Martin Lau, President. In Q1 2023, our total revenue was up 11% year-on-year. VAS represented 53% of the total revenue, of which social network subsegment was 21%, domestic games subsegment was 23%, and international games was 9%. Online advertising was 14% of total revenue and fintech and business services was 32% of total revenue. The revenue for VAS was 79 billion Chinese yuan, up 9% year-on-year. Social networks revenue was 31 billion Chinese yuan, up 6% year-on-year, driven by in-game item sales and music subscription revenue. Long-form video subscription revenue decreased 6% due to delayed content releases, but we have taken steps to address this, including enhancing content, extending collaborations, and strengthening cooperation with labels and artists. Domestic games revenue resumed growth to 6% year-on-year, driven by key titles such as Honor of Kings, DNF, and Crossfire Mobile, plus new game Arena Breakout. International games revenue increased 25% year-on-year or 18% in constant currency terms to 13 billion Chinese yuan. On Wixin video accounts, consumption grew with rapid increases in time spent in video views. We enriched customer management functionalities and strengthened onboarding programs to drive organic growth of the creator community. Our first quarter daily active creators and daily video uploads more than doubled year-on-year, while the number of creators with over 10,000 followers more than tripled year-on-year. On QQ, we deployed a new architecture to optimize development and enhance user security. For domestic games, users aged under 18 contributed less than 1% of total time spent in gross receipts in the quarter, down 96% and 90% from 3 years ago, respectively. Key titles achieved record high gross receipts, and new games generated strong traction. Now speaking, James Mitchell, Chief Strategy Officer. We increased gross receipts year-on-year for international games by double digits. Valorant grew its MAU year-on-year and gross receipts by over 30%. PUBG Mobile resumed DAU growth after several quarters of decline. We introduced a map editing tool to facilitate user-generated content, driving up engagement and longevity. Our subsidiary Miniclip launched Triple Match 3D in April last year, breaking into the top 10 games in the match genre and driving record high gross receipts in the quarter. Online advertising revenue was 21 billion Chinese yuan in the first quarter, up 17% YoY. Ad spend across most categories grew YoY due to consumption recovery in China. We upgraded our machine learning advertising platform to deliver higher conversions. For fintech and business services, segment revenue was 49 billion Chinese yuan, up 14% YoY. Fintech services resumed double-digit YoY growth from payments activities. Business services revenue turned positive YoY due to stabilization after restructuring plus initial contributions from technology support fees for video accounts live streaming e-commerce transactions. Now speaking, John Lo, Chief Financial Officer. In Q1 2023, total revenue was 150 billion Chinese yuan, up 11% year-on-year. Gross profit was 68.2 billion Chinese yuan, up 819%. Net other gains were 0.9 billion Chinese yuan, down 93%. Operating profit was 40.4 billion Chinese yuan, up 9%. Net finance costs were 2.6 billion Chinese yuan, up 37%. Share of profit of associates and joint venture was 0.1 billion Chinese yuan. Non-IFRS operating margin was 32.3%, up 5.3 percentage points year-on-year. Non-IFRS net margin was 22.3%. Up 2.9 percentage points year-on-year. Total capex was 4.4 billion Chinese yuan, down 37%. Free cash flow for the quarter was 51.8 billion Chinese yuan, up 240%. And net cash position was 31.5 billion Chinese yuan. Citi analyst Alicia Yap inquired, "Can I get confirmation that Wendy Huang's volume has been turned up so we can hear her clearly?" Citi analyst Alicia Yap inquired, "I asked Wendy Huang if she could hear me better and she confirmed that it was much better." Citi analyst Alicia Yap inquired, have you seen any notable differences in user gameplay behavior, spending frequency or willingness to spend since the pre-pandemic period that could explain the record gross receipt for your franchise title during this quarter? Are the robust game activities attributed to an effective promotional campaign, or is it a phenomenon across the industry? Additionally, what is management's view on the recent price cut actions by major peers and how will that affect? James Mitchell replied, Tencent's game portfolio includes successful, evergreen titles such as Honor of Kings, League of Legends, Crossfire, Crossfire Mobile, Peacekeeper Elite, PUBG Mobile and Arena Breakout. The recent success of these games is attributed to appealing content and promotional campaigns for virtual outfits which tie into events such as Lunar New Year and May Day holidays. User behavior in the 3 years since China went into COVID has seen an increase in purchasing power which allows players to spend more on high-quality content. Price cuts to cloud services, impacting infrastructure as a service, affect a few basis points of Tencent's revenue. Citi analyst Alicia Yap inquired, did Alex Yao from JP Morgan ask the next question? JP Morgan Chase & Company analyst Alex Yao inquired, have I understood correctly that the deferred revenue increased sharply by 18% year-on-year this quarter, and that there may be a strong VAS in gaming revenue over the next 2 to 3 quarters? Is the installment loan product being rolled out quickly to Wix and paying users, and what is the expected financial impact of this on the fintech segment? John Lowe replied, deferred revenue components include virtual game items, business cooperation agreements, prepaid advertising, and prepaid-to-pay tokens. Year-on-year growth is attributed to success of online games in terms of cash consumption. Total deferred revenue dropped by 1%, while quarter-on-quarter increase was 17%. PCA amortization caused a drop in prepaid advertising due to seasonality. Martin Lau replied, we are pilot testing an installment loan product that is designed with compliance of regulatory authority regulations and to generate user value. It is part of our gradual expansion of financial value-added services to users and merchants, while we remain focused on risk management. We plan to work with licensed financial institutions to expand the product over time. Goldman Sachs analyst Ronald Kung inquired, have we seen a 2-year CAGR growth rate in ad revenue and video accounts, and how can the foundation model AI landscape help Tencent drive future multiple growth drivers and cloud growth in the second half of 2021 and beyond? James Mitchell replied, we believe China is experiencing a broad-based consumption upturn, especially for everyday low-ticket priced items. Our advertising revenue is experiencing strength across the board in fast-moving consumer goods, e-commerce, finance, online services, healthcare, and travel. The 2-year CAGR for our advertising revenue was -2% in Q1 2021. Education-related spending and full-screen ads in our ad network dropped during 2021. Now speaking, Martin Lau, President. AI and foundation models are anticipated to be supported by large companies 2C and 2B, as well as startups creating more general and vertical applications. User-to-machine interactions, search, information generation and content aggregation will be more disruptive. Government is supportive of regulation in AI industry, with the right framework for healthy growth. Chips are largely available, with short-term shortages in supply. Goldman Sachs analyst Ronald Kung inquired, we received thanks from Wendy Huang for Martin and James' help, and Kenneth Fong from Credit Suisse is the next to ask a question. Credit Suisse analyst Kenneth Fong inquired, have earnings outpaced revenue growth in recent quarters due to video account monetization, operating leverage and cost optimization? What is the one-off deferred tax from overseas subsidiaries' impact on non-GAAP net profit? James Mitchell replied, this quarter, revenue grew while non-IFRS net income growth was unusually wide on a year-on-year basis. However, if looking at the 2-year CAGR, revenue and non-IFRS operating profit growth were equal. Going forward, the gap between revenue and non-IFRS profit growth is expected to narrow due to the base effect normalizing. We are also becoming a structurally more cost-conscious and efficient company than before, which helps margins. Additionally, newer revenue streams like video accounts, e-commerce live streaming, mini-programs and mini-games have higher gross margins. John Lowe replied, I expect the effective tax rate on a non-IFRS basis in 2023 to be 18 to 20%. There are pieces of true-up happening from time to time that can cause fluctuations, such as withholding taxes or deferred tax adjustments. Credit Suisse analyst Kenneth Fong inquired, the London office. I thanked James, John, and Ken and mentioned that the next question would be from Esme Pao from Macquarie Group analyst Esme Pao inquired, have we already started developing the Hunyuan aid, as reported in March? Does it use open internet data for its training data, and what is the impact on interoperability in digital walled gardens? Martin Lau replied, "We're making good progress on our foundation model building exercise, Hun Yuan. Data collection is across the internet and includes high-quality public data from China and our content ecosystem. We're scaling up our training organization and infrastructure and have recently announced a high-performance computing cluster with NVIDIA H800 GPUs. AI is seen as a growth multiplier for Tencent, providing a way to generate appealing content on large scale at a low cost, improve monetization and lower costs. It also facilitates user-to-machine services such as search and digital assistance, and provides compelling services on the cloud for enterprise clients." Martin Lau replied, "Management was thanked for taking questions. The last quarter they provided an update on domestic regulatory backdrop, which was asked to be updated on recent news flow around domestic gaming, short-form video, and fintech. A follow-up question was asked about the domestic gaming momentum, asking if growth could potentially return to double digits. Martin Lau replied, "The regulatory environment is continuing to trend toward normalized regulation, with the Chinese government supporting the digital economy and industry." On April 28, President Xi called for regulated, healthy development of platform companies and innovation. Domestic gaming continues a status of normalized regulation with game licenses being approved regularly. Short-form video has not been a focus of regulatory action yet. Fintech is starting to move into normalization of regulation, with the POC requiring self-review of services by platform companies in 2021 and conducting a routine inspection on Tenpay. Results of the inspection are being finalized. Regulators will focus on normalized regulation and support development and innovation in the overall industry. James Mitchell replied, "We experienced low double-digit year-on-year growth in global game revenue in the quarter, and industry challenges such as post-COVID hangover in the West and lack of new game licenses in China have been worked through. We believe that the industry can revert to its historic high single-digit CAGR growth rate. Our ability to outperform or underperform this rate will depend upon the quality of content we can bring. We believe that we have the potential to outgrow this rate due to our evergreen games, successful and creative studios, and mini-game platform." HSBC analyst Charlene Liu inquired, "Have there been any updates from the management on their M&A strategy for the international games segment, particularly after competitors' M&A activities? What is the view on competitive landscape and growth expectations for the rest of the year?" James Mitchell replied, "The acquisitive landscape in the game industry has remained stable for the past few years. A number of companies have been active in acquisitions, but their goals do not always align with ours. We are willing to invest in mobile, PC and console game studios that look to the future over 3 to 7 years, even if this may lead to a temporary decline in revenue. There could be more change in the future depending on whether certain large deals materialize." HSBC analyst Charlene Liu inquired, "Have over half of the total ad revenue come from Wixen in the first quarter? What is the revenue contribution by app products such as Moments, Video Accounts, and Ad Network? How should we expect the revenue mix and GPM trend to be going forward?" James Mitchell replied, "Wixen is the majority of our revenue, with Moments being its largest contributor. Mini programs and official accounts are similarly sized and smaller than Wixen, while video accounts have grown quickly due to high revenue per 1,000 impressions. Outside of Wixen, mobile ad networks have seen growth in the last 6 to 9 months in long-form video, music, news, QQ and QZone make." HSBC analyst Charlene Liu inquired, "I have just received confirmation from Wendy Huang that we are now ready to move on to the next question." From John. Daiwa Capital Markets analyst John Choi inquired, "Have we seen strong revenue growth in the gaming sector this quarter, and should we expect accelerating growth in the second half? Additionally, what caused the significant investing outflow cash flow of 65 billion this quarter?" James Mitchell replied, "I observed that in Q1, we saw strong revenue from evergreen games and newer releases. Revenue from new games often doesn't show up on the P&L due to deferral policies, but there is typically an increase in daily active users, DAU, as players become familiar with these games. Examples include Arena Breakout, leading extraction shooter game in China, Golden Spatula, over 10 million DAUs in 2 years, and League of Legends, Wild Rift mobile game. We have a number of big games slated for release domestically in 2021. John Lowe replied, "Net cash flow of 65 billion from investing activities was discussed, with 50 billion related to net fixed-term deposit placement and forward 4.5 billion each for CapEx, media content, and M&A. UBS analyst Jerry Liu inquired, have we seen Tencent taking market share in the ad industry due to their e-commerce strength, and how do we think about the development of e-commerce-related monetization within video accounts, particularly in terms of technology fees which increased in Q1? James Mitchell replied, Tencent has experienced share gains in terms of big e-commerce companies advertising with them due to changing perceptions regarding their competition and the deployment of more sophisticated machine learning for targeting. This machine learning is beneficial for large e-commerce companies with a wide range of SKUs, allowing Tencent to display the right SKU to the right user within the e-commerce company's advertisements. Now speaking, Martin Lau, President. We have identified a big opportunity in e-commerce through live streaming and video accounts. We have many programs and private domains that can be used to connect with the video accounts, as well as payment capabilities to enable transactions. We believe there is a large headroom for growth in this area, but will take time to build infrastructure and ensure the user and merchant experience is balanced. If done right, we anticipate a long runway for growth. UBS analyst Jerry Liu inquired. I thanked Jerry and took the last question from Robin Zhu from Bernstein. Alliance Bernstein analyst Robin Zhu inquired, have the company's cost-cutting efforts continued to be successful and at what point will they pivot to focus more on spending for growth? What is the outlook for gaming ARPU recovery in Q1, which may have been driven by pent-up demand, and how does it differ between high ARPU games and those with lower ARPU? James Mitchell replied, we saw a broad-based recovery in our game business with 12 out of 15 games up year-on-year. We will invest aggressively in areas such as new game launches or buying GPUs, but also keep operating expenses under tight control due to becoming more efficient and mix shifting towards higher margin activities. We have a range of emergent growth drivers such as video accounts advertising, e-commerce live streaming, mini programs/mini games which provide sizable opportunities without needing heavy subsidies or sales/marketing activity.